If you haven't heard, I'm going to simplify everything really quick for you in this video. Foreclosures are up 19%, bankruptcies are up 11.8%, and now Fannie Mae, the Federal National Mortgage Association that buys loans in the secondary market from lenders, said they're eliminating the need for credit scores. On top of all of that, Trump says he's going to be sending out stimulus checks, $2,000, that basically are dividends from the tariffs. Now, I'm going to explain all that to you real simple right here, right now. Most importantly, how you can take that $2,000 and buy a house just like this one. Let's jump in. As of October 2025, we've seen foreclosure filings jump 19%. Now that's year over year from 2024 to 2025. Now, as actual filings, that's 36,766 if you want to know those numbers. But this is what people have to understand, that we've also seen that increase every month for the last 8 months. And what's important to know is that that doesn't necessarily mean we'll see a crash, but it does mean that we're seeing the financial pinch. Perhaps you're one of those where it's like, man, everything is going up, prices are going up, and now we're seeing home foreclosures on the rise, not to mention bankruptcies on the rise. But what does that mean? What's going to happen to home prices? You see, the average price of a home in 2024 is $512,000, and even though we're seeing foreclosures increase, it's not enough in retrospect to make the home prices come down. And the big reason why is you have to understand that over the last 5 years, foreclosures have been the lowest they've been in 30 years. So to put some numbers in perspective, in 2024, there were 322,000 home foreclosures, compared to the housing crash, for example, in 2008, 2009. In 2009, there were 2.8 million home foreclosures. Now, something to really compare it to is last year in 2024 was one of the slowest years for home sales, literally in 30 years, but there were still just a tad over 4 million homes sold. Now compare that to 2.8 million home foreclosures back in 2009 and 322,000 in 2024. That doesn't necessarily mean we're going to see a housing crash, nor will we likely see home prices go down. Now, a couple of reasons for that is we're low on inventory. The National Association of Realtors Chief Economic Officer Lawrence Yun basically says that we're going to see a 14% increase. Now, don't shoot the messenger. I'm not looking at the data. I'm just looking at some information that I do see, and that is we're at a housing shortage. We're also looking at interest rates are going to bobble around 5.875%, which is pretty good in retrospect. However, it's still high compared to a 3%. You also have to understand that people are equity rich per se. They have a lot of equity in their home because they've been in their home for a while. The average homeowner is staying in their home for 12 years. So what we're going to start to see more of is actually people putting their home on the market even though they got a 3 or 4 or 5% rate, because when they sell their house, they can roll that equity, say it's $50, $80, $100,000, $150,000 into their next house. And when they roll into their next house, you're going to see basically people purchase more houses. You also have to look at new construction. There's a lot of builders around the country that are building houses and offering incentives through the mortgages and mortgage companies. A lot of them, like D.R. Horton or DSLD, or a lot of these large builders, Lennar, they have a mortgage company that's in-house and they'll buy your rate down. So that's why I always suggest to people, if you're going to look at a house, especially if it's your first home, consider looking at a new home, because a lot of these builders are buying your rate down. For the first year it's 2.9, the second year is 3.9, the third year it may be 4.9, and then the fifth year is 5.9. Some of them are freezing it and staying for 30-year fixed at 4.9. And that's an important factor when you're buying any piece of real estate. So I'm sure you'll agree, you see a lot of people that are in a pinch, and that leads me to bankruptcy, 11.8% increase in bankruptcy. And mainly because you have student loans, for example. They were on a freeze. People didn't have to pay their student loans. Now their student loans are coming. But it's also important to know that people file bankruptcy. However, you can't file bankruptcy on student loans or IRS debt. You also have to look at just inflation. You have to look at credit cards. When they bumped the rates up 3 years ago, 2.5, almost 3 years ago, some people are paying 30% on a credit card. Like every dollar that you borrow, you got to pay $30 back. Every $1,000 that you borrow, and yes, you're living off borrowed money, and I know it's frustrating, but you have to know that. That's why I always tell people, if you can, watch videos that I put out there on credit and how to get rid of that credit and how to get radical on that. That said, you also have to look at inflation. And anytime people need goods and services, you're going to have a spike. And you have to understand that for 4 years, we had a total of around 21 people, new people, come to this country. That's literally like adding the state of Georgia, Alabama, Mississippi, and Louisiana. 4 states. So you can't help but know that inflation is going to spike in absolutely everything. Food, clothing, shelter, water. Because at 21 million people into this country, they all need the same thing. We all need the same thing to live. So my name's Wayne Turner. I've been in the real estate business for 30 years and we just hit 500,000 subscribers. And for those of you that subscribe, I am more than grateful. I think it's wonderful. I'm a big believer in you learn something, you master it, and you teach it. And I've been in the real estate business for 30 years. I've bought, flipped, built. I've done just about everything when it comes to residential real estate. I've helped thousands of people buy their home. And I only share that with you so you can have the comfort and the confidence knowing that what you learn from me is from actual real life experience. Now, jumping back to the housing crash, we also have to look at Fannie Mae, the Federal National Mortgage Association. They buy loans from lenders in the secondary market and sell them basically to investors, right? All that can be really confusing, and especially when people say, well, they're not going to be looking at credit reports anymore. No, Fannie Mae's not, and here's why they did that. Basically, to loosen the belt, if you will, because they have this thing called desktop underwriting that they've been doing for decades. And the desktop underwriting, well, basically you can go online, fill out an application for a lender, it'll shoot it to desktop underwriting, and the computer basically would say, yeah, you're good, no, there's flags, I'm not too sure, you need to talk to somebody. But mostly it would say yes or no. Now, what they're doing now is if it says yes or no, and if it says no, more importantly, then an individual person who's an employer of a lender is going to look at that very closely and say, what is that? And here's what I mean, and it's to your advantage to hear this, and this is something good to write down. Now they're going to be looking at, have you paid your electric bill on time? Have you paid your water bill, your sewer bill, your phone bill, your rent? They're going to take that more into account. So what's going to happen is right now, the baseline is pretty much 620 on a credit score. Got a 620 credit score, 2 years of tax return, show proof 2 years on the job. They're going to look at your debt to income ratio, how much debt you have, the money coming in, and they're going to qualify you based on about a 33% ratio of what you can spend on a house. That ratio is not going to change. However, you are going to see some credit changing that's going to open up the doors for a lot of home buyers. Another opportunity that people aren't aware of is that there's a difference between Chapter 7 bankruptcy and Chapter 13. Chapter 7 is where it wipes it all out except for your tax liens and your student loans. Chapter 13 is when you get put on a payment plan where you're going to allocate and reload everything and you're just going to pay it off and have a monthly bill, right? If you file Chapter 7 or Chapter 13, you're still filing bankruptcy. And so what they do is, if you file bankruptcy, you can still purchase a house. Listen to me, people need to understand this. If you file Chapter 7 bankruptcy, 2 years from your discharge date, they'll give you a date. You'll file, it typically takes 2 to 3 to 4 months to get it closed out and discharged. Once it's discharged, that's your discharge date. 2 years from your discharge date, you can purchase a house with an FHA or USDA loan, as long as you have a 620 or higher credit score, as long as your credit score's up, your income's up, and your debt to ratio income's up. That's what's so important for people to understand. A lot of folks aren't aware that they feel like they filed bankruptcy and they can't go buy a house. Nothing's more far from the truth. You can. And that is why it's so important to be prepared and to be ready. You see, I'd mentioned that the Chief Economic Officer for the National Association of Realtors has predicted this stuff. One thing you have to look at is the percentage of increase in mortgage applications. And I tell people it doesn't cost you any money to get approved. Mortgage applications have jumped 31%. So that tells us that people are actually ready to buy. They're going to get out there and they're going to start looking. And that's another reason why I tell people, look at houses. This is a home right here. Can you see that? It's 1,400 square feet. 3-bedroom, 2-bath, 2-car garage, nice house, fireplace, $184,000. You have to also consider that this home has been on the market for 6 months. So even though it's been on the market for 6 months, there's been price drops in these houses. And I'm going to share with you here in just a second what you need to look for so you can get the best deal on the house. Before I get into that though, you have to know that Trump is saying that he's going to be sending out checks, $2,000 dividend checks, stimulus checks, if you will, to stimulate the economy. And I always tell people, hey, if you're going to do anything, look into buying a house with that money, because you can do a USDA loan, for example, and buy a house just like this. You can also do some FHA loans. It really just depends on the lender, and that's why it's so important. And I tell people, even though Fannie Mae doesn't need or look at credit anymore, the lenders are still going to. So it's going to be more of a competitive thing, if you will, when it comes to lenders, because some of them have FHA loan programs where they can basically give you a first and a second, which is equivalent to 100%, and you can buy the house. Now, before you go into thinking, oh, here we go, 2008, 2009 again, Perhaps, maybe, I don't know. I can't foresee the future, nobody can. But I can tell you that the lending practices are far more strict today than they were in 2007, 8, and 9. You also have to understand that these prices of these houses, this home is $184,900. That's gonna put your mortgage payment literally at around $1,500 a month. So answer me this, if you could buy a house 1,400 square feet, $184,900, 3-bedroom, 2-bath, 2-car garage, and you're gonna have a 6.25% rate, but your payment's gonna be $1,400 a month. This is what people have to understand. People get so hung up in the rate, but you don't do a mortgage calculator. Like, don't worry about the rate, look at the payment, right? Don't get me wrong, you're gonna pay more money in interest at 6% than you did at 3%. At the end of the day, you have to look at not getting so hung up on prices. So many people out there are like, prices are too high, prices are too high. And it very much depends on where you live. In the southern states, along literally the whole Gulf, Texas, Alabama, Mississippi, Florida, all the way up literally, when you look at North Carolina, those areas, we're seeing prices lower than in the northwest. Now, don't get me wrong, I'm not telling you to pack up and move, because some of the prices are crazy. I got a friend in Denver, Colorado, and literally a first-time home there is $500,000, and that's a home like this, which is crazy, because in your perception, in your mind, when you're not there, you think, well, it must be a big house. No, it's just a ranch-style house. That's just a basic house. But how did we get there? We have to understand that for literally 13 years, they never raised the interest rates over 5.25%. And you have millions of homeowners that have a rate at 5.25%. And that's why the average homeowner is staying in their home 12 years. It used to be 5. I've been in this business for 30 years. It used to be 5 years. Now it's 12 years. People are staying in their house. But you just have to know this. It doesn't matter where you live. You owe it to yourself to give yourself the opportunity to look at houses this way. And another thing you have to hang on to is look at new homes. Look at foreclosures, look at estate sales, look at divorce sales. That's why it's so important. If you've got an agent working for you, if you're considering a house, tell them to ask the owner, the broker, the listing broker, why they are selling. If that house is vacant, I promise you, and you'll probably agree, if that house is vacant, the seller's always going to be a little bit more motivated, because they either have money tied up in that house that they can't invest it somewhere else, or somebody's paying 2 mortgage payments. Now you have to know, I'm not trying to talk you into buy a house or do anything. You have to do you. You have to make yourself happy. What I do want to share with you is that it's important not to look at all the negative naysayers, because a lot of people out there have been saying that the housing market is going to crash for the last 6 years, and it still hasn't crashed. Will the housing market crash? Hell, who knows? It might one day, but as of for right now, leading into the next 3 years, the Mortgage Bankers Association are basically saying the rates are going to stay around 5.875%. We're seeing a 31% spike in mortgage applications. They're predicting a 14% increase. So all these things are changing. They're talking about mailing out stimulus checks. You can buy a house with that, because all you need basically is $1,000 to do a home inspection and pay for an appraisal. So at the end of the day, do you. Make yourself happy. I'm Wayne Turner. Thank you for watching this video. Give me a thumbs up, subscribe to the channel. Until next time, God bless.